This is Matt Russell from the FX Power Course, and welcome to the Daily FX Walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound. If you recall, during yesterday's report, I mentioned how we might lighten up on any short positions that we might have taken, and look for the longer-term short trade setup near the longer-term resistance line right now, just above that 86 figure. So this is a trade level, price level that we can keep an eye on for the next 24 to 48 hours. We might look to enter at or just beneath that resistance line with a stop, maybe 50 pips or so above the line. The next chart is the Aussie Kiwi. If you recall, during yesterday's report, I mentioned how I was expecting an eventual breakout beneath that 124 figure. However, I also mentioned that we should wait for a close beneath that 124 figure before entering. And yesterday's candle was a great example of why we should wait for a close beneath that level to confirm the support has been broken. Because as of right now, that support is still valid. So moving forward, what I would suggest right now, really no trade setups at the current price level. I would, again, still have a bearish bias against the longer-term previous support line, which should now act as resistance. Now, there are two ways this trade can play out, or two entries that I would suggest. The first, and the entry with the least amount of risk, would be a return to the previous support line right here, which should now act as resistance, considering that prices did break beneath that support line. That, again, would be the most advantageous in terms of a risk to reward standpoint. We might look to enter at the previous support line with a stop maybe 50 to 75 pips above that line. The other side, and what's the more likely scenario in my opinion, is a close beneath that 124 figure, but again, we would have to wait for that to actually occur before we do enter. Assuming a close beneath that level, we then look to enter on the open of the next candle and place our stop above that 124 figure, maybe in the 2450 area, but that trade obviously will depend on where exactly that candle does close beneath the 124 figure, so certainly we're going to keep an eye on that for the next day or so. Next chart is the Pound Swiss. Not much has changed here, and I was looking for trade opportunities, and I just wanted to highlight a common mistake that traders, especially newer traders, make in terms of their analysis. So I'm looking for a trade setup in this pair, and I'm leaning towards the short side, as that has been the overall trend, although obviously we can see a shorter term daily uptrend for the duration of 2009 so far. So I drew a parallel channel line. This is a common charting method, and I then connected it to this line right here, which would be the logical point for a channel line, and we can see that that got up to about the 190 figure, so about 1200 pips away. Not a very practical trade idea if we're trying to enter a trade within the next 24 to 48 hours. So what did I do is I slid down this line to this level right here, and boom, prices right now are at that upper line. We can see, though, there's a lot of penetration on the left side of this line. So this is a tendency that I see newer traders do, is they try and fit. They might at first do the right thing, which is draw the channel line correctly, but then when that doesn't satisfy their urge to get into a trade right away, they might all of a sudden adjust the line and say, okay, maybe the line should be here, setting up an imminent trade setup. Now, this is a decent, I would call it maybe a decently valid line, if you will. It could very well act as resistance, but it's not very reliable at all. So this is a mistake that we want to avoid as newer traders moving forward. When we're looking for trading opportunities, we should wait for the prices to reach a very clear resistance line, as this line would be. So what does that mean? In terms of the Pound Swiss, there wouldn't be any trade opportunities on the Pound Swiss, but we would scan other pairs to see if there are similar opportunities that are based on clear support or clear resistance lines. The last chart is the Euro Swiss, and the same thing that's happening here. I'm still just waiting for prices to come down and test the previous resistance line from the opposite side, which should now act as support. Let's zoom in here a little bit, because this does look like a classic flag pattern forming after the large up candle here by about 400 pips on this candle, and prices now are consolidating a little bit, and again, it looks like a little pennant forming. We would need to give it a little more time. Ideally, what I'm looking for, we can call this A down, B, and the C wave might be underway now, and hopefully the C wave will extend the sell-off down to that previous resistance line, which should now act as support. We might look to enter just above that line, this white line that I'm pointing to right now, with a stop maybe 50 to 75 pips beneath that line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.